This is our Forex blog for December 9th, 2011. And like most days, we want to buy the strong currencies versus the weak. Yesterday, the dollar and the yen were weak, and a few days before that were weak. We had a shift into a daily, weekly, and monthly uptrend. And when you see that, on all time frames, extreme strength, you want to buy those currencies versus the weakest one. So the New Zealand was strong earlier in this week and last week, but this, today it's weak. So if you see big momentum down moves followed by, 1/2 to 1/3 less strength, usually that extreme weakness will continue if the weekly trend's down, and most of the time the daily trend's down as well. And that's exactly what you see here. So, starting around midnight, you can be looking for New Zealand yen sells and New Zealand dollar sells, because the dollar and the yen are both extremely strong on all time frames, and the New Zealand's very weak. It's that simple. And looking at this on the chart here, you can see that it fell tremendously last night. This is a narrow range pattern right here. And when price is underneath the hourly, it has a narrow range pattern. You want to sell the breakdown underneath here. And you can see this trade right here fell from 14 all the way down to 56. It fell about 60 pips. Like I've said in my narrow range, intraday narrow range classes, this is about a 50-50 or even less than 50% winning system. However, it oftentimes leads to huge trends. And anytime you get a big trend like that, typically you want to wait for at least 38% pullback is ideal, 38 to 50%. You got that here, and that basically once the market breaks down, you might have went short right here. Anytime you can put your stop above a resistance area, the 50% is very likely not to go above there. You can see the price, went sideways here, and your profit target is, my Fibonacci profit target I do each night shows up on your charts. You can see that, the middle of that is where the exact level is. 56 is where I thought a potential support is, and it went only 15 pips underneath that. When it's underneath the lower containment band, usually it does, reverse. But you can see coming up to midnight, you have a nice, beautiful 10, 20, 30, 40 pip trade down to the 20-day moving average where it found support. Here's the New Zealand yen. We had the same thing. This one was quite a bit weaker than the dollar, and it actually did retrace back up to the 38% fib, almost to the pip. It also happened to be a monthly pivot level, and this is basically called support resistance clusters. Anytime you have two or more major support or resistance areas, in this case it's resistance, they're selling on the way up to it, you can see a great place to go short, and the price went sideways and came down. You would have made about 20 pips on that one. Another currency that was strong for most of the day was the pound. We don't typically trade the pound New Zealand, but let's just take a look at it. Strong pound, weak New Zealand earlier in the day, coming up to midnight. Actually, let's find the exact time. Actually, it's quite strong here from 1 to 6. This one's weak until about 3. So until 3 o'clock, you could be focusing on buying the pound New Zealand. We basically have two methods to get into trades. One of them is a pullback trade, which you just saw in the New Zealand dollar and New Zealand yen, and the other one is a sideways rectangle pattern, which you have here. The minimum is at least an hour, and it went sideways right here, broke out, and you can see it went up 25, 50, 75 pips. Very huge profit. This has a much wider spread than some of our other pairs. Now, when the currencies that's very strong starts to show some weakness, knowing that the yen was weak earlier this week and also last week, we can be trading it for a 1 to 3 hour counter trend move. From 3 to 7, it's very weak, but you don't know how long it's going to stay weak. It might only be for half an hour, and so therefore, you can take trades like this, but estimate smaller profit targets. If it continues to be weak for 5 hours, then hang with the trade, but have your finger on the exit button when the weekly and monthly trend is up like this. And you can see the same exact opposite pattern you had here in the dollar. You had here extreme weakness followed by very little strength. that weakness is likely to resume, but it's not likely to go weak for an hour to 3 hours. It did today, but it's less high probability. Let's look at that dollar trade here coming up to 5. What currency was extremely strong right before 5? That would have been the pound. So the pound dollar right around 5 and afterwards, very high probability buy. Here's the chart. First of all, the price is underneath the hourly. It comes up to it. It's got major resistance areas here. Monthly pivot, 20-day moving average. Here's 5 o'clock. And when it broke above here, the pound was already strong. The dollar was showing very high probability signs of reverse. It took it an extra hour before it broke out, but it went up 75 pips, and the currency meter predicted it quite a bit before that. Look at the pound. Very strong. The peaks are much stronger than the weaknesses. See that? And the exact opposite happened in the dollar. It was strong earlier and anytime it's strong for 3 or 4 hours and then you have some weakness, it might pull back 1 to 3 hours before it resumes its uptrend, which came back about 6 hours later. But when you see this pattern of extreme weakness followed by very little strength, that weakness is likely to continue. And when you can find another currency that has the same exact opposite pattern, you're better off. Now, the best of all worlds is when you have these two patterns like you have here, and the dollar would also have a daily, weekly, monthly trend down, and the pound had a daily, weekly, monthly trend up. That wasn't the case. So, as you can see what happened with the pound, it exploded up, but then it came right back down. Why? Because the dollar has a strong weekly, monthly trend, and the pound had a monthly trend that was down. So when it gets above these upper containment bands, and notice you have a beautiful 1, 2, 3 reversal here. Extreme strength, pullback, no strength. It's at the upper containment band where most of the time it reverses, and you got another almost 100 pip drop right here. So if you're an aggressive counter trend trader, you could also very easily look to sell that. And you would estimate the hourly as a profit target at 33, but it continued another 40 pips down.